Hi everybody, Eddie here. Going to do a market update for next week. So this week was fairly bearish. We started off right from on Monday we had the inside bar. So on Monday we had the inside bar. We were looking for the Fed meeting on Wednesday for either a break above this level right here, which was a key resistance 3900, or we were going to actually break down after the FOMC meeting. So it looks like we did break down after the FOMC meeting. We did try to break this for 3 days, and it could not break through. That 3900 was a hard stop, right? So I shorted this 3900 multiple times this week, right? On Monday it was really tight range, so there wasn't a lot of trading. But on Tuesday, after we gap up and we ran into 3900, got rejected right away and came down pretty close to the 8 EMA. So we had a really good day shorting that. And on Wednesday, during FOMC, we had that big bullish run into FOMC, and then after the minutes, it ran up until JP started speaking, and he got flushed down afterwards, right? So it was a huge day for us. We actually ran it all the way up into the FOMC, and then after that, we actually scalped it up as well. And then on once he hit that around that 3900 and JP started talking, we took a huge short position and we profited on the way back down again, right? So after that, we on Thursday we and Friday we tried to test this low at 3700. This is a key support area, and it looked like we did hell at the moment. So right now we're still technically in an uptrend, right? So unless we break below this 3640 area, once we break below 3640, this uptrend is no longer valid, right? It enters into more of like a bear scenario where you'll break down and make a lower low, right? But as long as we hold this 3640, there's still a chance that we can actually bounce back up. And because next week we have the midterms, I do suspect we will get some volatility, and it depends what the outcome is. We could get a rally up and potentially break this area right here, and get like end of year rally up into maybe 4100 or 4200, right? So that is very possible. Right now I'm not trying to predict anything. I'm more of just trading the action, and in whatever direction it goes, I'll trade into that direction, right? So I'm letting price action decide what I'm going to trade instead of trying to be biased in a direction, right? So currently it is below the 8 and the 21 and 50. So this is a very heavy resistance area. So 3800 is a key area to break for next week. So on Monday, we actually gap up above this and hold. Most likely we're going to retest this area right here of 3900, and then if this time we break through, then between 3900 and 4100 there's a pretty good runway for it to go to, right? So you can see I already have my arrow over here from previous analysis. So I do suspect that if we do run up, we're going to hit this 200-day moving average around that 4100 area, which is the upper part of this megaphone. And then once it hits that area, that's where you have to be very careful to see what it's going to do next, because if it actually breaks out of the megaphone, we're going to get our bull rally out, right? Because it will be above 200-day moving average, which a lot of people will have their stops on. So if we break above it, there's going to be a lot of short covering, right? If it gets rejected, that's a hard rejection, and that's a key rejection area. It can come down pretty quickly as well, and then we might get our next leg down. Anyways, that's what I am looking for in the next couple weeks. For a move like this to happen, probably want to take 2 or 3 weeks to complete. So it's more towards the end of the year. Maybe finally this year we get like a Santa rally. We didn't get it last year. So we'll see what happens at the end of the year. Okay, let's take a look at the Qs. So the Qs are fairly weak, super weak actually, compared to the rest of the index. You can see we're near the lows of this area, and this is a very key area to be in. right? So this low right here, it's been tested multiple times, even before and now. So we lose 260. It's come down to about 240, and then it can actually come down to around this 220 before any type of higher support around that area, right? So you want to watch very carefully what happens right here. A lot of the bigger names are breaking down, so that's what's causing the market to actually have a lot of selling pressure this week, because everything else is kind of slowly either steady sideways or going up slowly, right? But the big tech is what's really dragging the market down for the last week, because Google, Apple, Amazon, and Microsoft is just completely flushing down, right? So that's what's dragging the Qs down much more than S&P 500. And it's really important that you want to watch your FANG names for the next little while, because they can trigger a massive sell-off if things go bad, right? Because they make up for about 25% of the entire index. So it's a huge part of the index, right? And surprisingly, I was looking at the mid caps and small caps, and they're performing fairly well. So, like, this is the mid caps, MDY, and mid caps made a double bottom, and it's testing the 200-day moving average once again. So next week, if we break above the 200-day moving average on the mid caps, you can actually lead back up into like this $500 area for mid cap. So that would be towards the high the all-time highs, right? Which would be crazy, but a lot of the mid cap names are actually fairly strong right now compared to the larger caps. Same with the small caps. IWM, very similar chart to MDY, which is it tests the 200-day moving average, and then it's holding the 821 and 50. So, and this looks very much like a double bottom, and we did test at this pre-COVID high already. So if any type of momentum and this start taking off, it could come back up to about 210 area, which is the low of this consolidation area, right? So this is a very key area. If we break through that and come back above here, small caps tend to move ahead of the larger caps. So because a lot of people start taking on more risk, they go on the small caps or the mid caps to get a little bit more aggressive on the momentum names, right? So when the risk is on, these are the names that they go to. So it looks like that a lot of the riskier names are actually getting some more action than the big tech names, right? So there is a little bit change of scenery, and that would be something I'll be looking at for next week for some potential swings on stocks, to look at some of these small names in the mid caps to see where the action is going to. All right. Let's take a look at the VIX. So on Friday, the VIX fell below 25, which is a very key support area. Now I'm looking at this 23 and 20 is a major support area. So if it comes down to these areas, you want to start seeing if there will be a bounce of these areas. Because if it start bouncing off these areas, likely the index will start dropping, right? So if there's a reversal coming, you want to pay close attention to what the VIX is doing, right? So if the VIX start getting some sharp reversals, expect the index will get some sharp reversals on the downside as well, right? So as you can see right here, we have very steep decline in the VIX while the market was going up. And then one day we just kind of gap up and ran, right? So that'll be the same scenario we'll be looking at. We're either going to look for a gap up or a big, large spike in the VIX, like candle like this or this, right? If that happens, then risk is off again. Then you're gonna have to go back to your portfolio and start hedging if you're holding on to stuff, or you just go cash and start looking for short opportunities, right? So that will be the trading plan for the next couple of weeks, is to watch what the VIX is doing, watch what the price action is going to be like after midterms, and then decide on the direction of that, right? Now let's take a look at the stocks. All right, so Apple. So Apple's been targeted as a big short. I think last week there was some flow coming through in the options. There was about $56 million in put option that one customer bought. That's a big, huge bet that the Apple's going to come down really hard, right? And if you look closely, Apple's in the head and shoulder formation, right? So if you don't see that, I'll show you. So this is the shoulder, head, shoulder, neckline. So if we break below, say, 130, right? Break below that, and there's some support in this region right here. After this is gone, 110 is gone. It's a long way down, because as you can see right here, there's not a lot of demand right here until all the way down to about $81 or $81. So we lose this major support zone right here. It can get really ugly for the index, because Apple is a huge part of the SPY NQ index, right? So you want to be very careful. Keep a very close eye on Apple. This will give you a hint of what's going to happen next. Right. So let's take a look at AMD. AMD is forming some sort of like a bear flag going on right here. So if we're going to get a rally up next week, likely this can hit around $65-$70 before the rejection. So there's a little runway, and then at this area right here, you might want to short it down to about $50, even down to around 40. If chips continue to sell off, because chips right now are in a very vulnerable place because they are not allowed to sell to China. So that's a big part of every single chip company's business. If that's banned, then obviously they will miss expectations, and they will start guiding down constantly, right? So be very careful on the chips until that thing changes, and it could change. So right now, I'm staying away from chips unless it gets very cheap, which is down here. If it gets cheap down here, then I'm definitely buying some for the longer term. Amazon. You can see why the index is breaking down, right? Look at Amazon. Amazon had this huge consolidation area up here. It fell, it broken down, tested multiple times, rejected, and then I was talking about this area right here from before, and then after earnings, you just gap right down and choke that out. And right now we're at this major support area, which got broken down last week. As you can see right here, we had a huge gap down on earnings, and then continue lower. Right now, we're down to this major support area right here. And it can get very ugly to break below it, right? So this is the major support. If it breaks below that, there's no support to $50. If it comes down to $50, definitely buy, hold for the longer term. Even right here, it's below $100. It's buyable. Like, you can probably allocate about 20% of your initial position right here, and then add on to it probably around 70, and then at 50. And this is longer term portfolio I'm talking about. So if you want to invest for longer term, this is what you're going to do, because these are opportunities to get into these very large cap names that will, once the economy picks up, they will start coming back with a vengeance, right? So these are great names to invest in for the longer term, and you might not get them this cheap again. So when it gets this cheap, you want to start considering buying for the longer term. If you're trading, then definitely don't hold overnight. You just go and trade it day by day until direction changes, and then you can go back to swing trading, because right now it's not a swing trading environment, because if you can't tell, we're up huge one day, we're down huge the next day. So anything overnight in either direction could get killed. So this is why I'm continuing to day trade and not swing trading, although I am looking at some names, and I do have a big watch list of stuff that I will be buying once we bottom. I do not see a bottom just yet. There's no capitulation just yet, because if you look at the volume on the index, we're not at that area. You want to see huge volume coming through. That's when you know that potentially that will be the bottom, and we don't see it just yet. Meta destroyed this stock, and I told you to avoid this stock, and this is exactly why. Look at that. After earnings, it just went nuts, right? So stay off this stock. I mean, it's really cheap valuation wise, but that does not mean it's going to come back. If you want to hold it for the next, say, 20 years, then yeah, you can start investing some right here and just buying it for longer term. But you know, I think Mark already said that he he said it's a 6-year plan, right, for metaverse. And metaverse right now sucks. Nobody's in there. They're losing the users. Anybody that went in is actually stopped playing because yeah, it sucks. So you know, it's something that they need to develop, and they invest a lot of money in. They lost a lot of money already, and if they can't get it going, yeah, this company can be done, right? So you know, they were a $1 trillion company. Right now they're worth under 300 billion. So you know, that's just the way it is. All right. When you have a technology and the technology is no longer valid, then this is the action you're going to get. So avoid that right now, and then see what happens in a little bit. Google, I'm very surprised that Google is dropping like this, but you know, it creates opportunities for longer term, right? So we hit our first target, which is right here. This is a minor support. We're pretty close to a major support, which is around the $70 area. It's at 86. It's buyable, right? At 86, you can probably allocate about 1/4 of your money for the longer term for a position. So if you intend to buy, say, 1,000 shares of this stock, you want to buy 2,500 right here. And then once it falls down to these areas, then you can allocate a little bit more money, right? And down at these areas, you want to look at price action to see if it's going to hold. If it's going to hold, this is where you want to allocate your other 25%. And like I said, you only want to allocate maximum 50% as the stock going down. You want to allocate the other 50% on the way back up once the market goes back into a bull cycle, right? You never want to put all your money in one basket while the market is going down, right? And you know, and this is a lesson I learned from previously in other market crashes. When you think things are cheap, things can get way cheaper. Right? So, you know, you don't know that if it's going to continue to come down. I mean, like if things go really, really bad, I mean, we would see $50, right? So, you know, you have to plan that into your investing, even for the longer term. Even though that this is a major support right here. I mean, if things go bad, you can come all the way down here, right? So, you know, just prepare yourself for something like that. And, you know, if you want to hold for longer term, and Google's a really good stock to hold longer term, and it's very cheap compared to the highs. So it's a 50% discount right now. So, you know, once it comes down to these levels right here, you just have to put some money in there, and then you know, just dollar cost average into a longer term position, and then you know, work your way back up once it finds the bottom, right? Microsoft, same thing. Microsoft is that major support right here, so we do enter into this support zone this week, and this is a consolidation area from before. This is also an area where people were accumulating from before. So you know, this is a buy zone. Again, you want to allocate maybe 1/4 or even just 1/5 where we're here, and then you want to add on the way back down, right? So for Microsoft, if it loses its 200 area, you know, there's a big zone from here to bottom of COVID, which is right here, before the next support. So that's a long way down. So you really, for stock on Microsoft, you don't want to invest too much because it didn't fall that much just yet, right? So if this gets taken out, you want to wait till like around this 150 area before you want to add any more into it, because it can have a pretty long way down as well. So, tech names tend to get very ugly when the momentum is in the wrong direction, right? Because everybody's targeting these type of stocks to short right now because the economy is bad. So, when everybody's shorting into the same four names, just like before, everybody's buying the same four name, the price action can come down really quickly and very steep on the way down. So you want to be very careful on what you allocate for even these big names, because like I said, cheap things get super cheap in a very bad scenario, and we could get to a very bad scenario. It's We're not there yet, but it can get real bad. So we don't know how this inflation thing is actually going to work out. We don't know how high the interest rates actually going to go. We don't know how it's going to affect earnings for the next few quarters just yet. So just watch the price action, right? What you're looking for is key supports and a lot of volume coming through at these key supports, right? So on Friday, you can see after earnings, we have some huge volume at earnings, and then market price actually start coming down after that, right? So watch this 210 area very carefully. So I'm setting an alert right here. So, I didn't actually allocate any money into these stocks just yet. I'm still watching it because we're still in a very steep decline. I am actually looking forward to find some sort of a bottom before I want to put in that one fourth of the position in there. So I'm still just watching it. What I'm looking for is actually for the price to curl up back above the moving averages with volume, and then I'll add some in there, right? I might actually start selling some puts on these because it is at a point where I should be putting some money in there, because right now in my longer term position is just sitting on cash, is doing absolutely nothing right now. I sold everything at the top, and I just decided even my longer term, I don't want to hedge anymore. And then what I did was actually I closed off my hedges, closed off all my positions, went full cash in January. So that was the probably the best choice ever made. So um, anyway, Netflix, we're very close to that gap fill. It is coming back down, so it's back below the 200-day moving average now. So it may not get that gap fill. It looks like it wants to fill this gap instead. So Netflix, it might come back to 220, which is the main support right here for this zone. If it holds around this zone, eventually it's going to gap fill. I just don't know when yet. So we're gonna have to see what happens next week with the midterms, to see what people want. I don't know who everybody's rooting for, but it can change things, right? So certain sectors will go up, certain sectors will go down based on who's going to the outcome of the election. So that's something you have to watch and see what happens after. Nvidia, we fell below this big zone right here, and we actually came back up. So this is a huge zone. As you can see, this is an area where there was a huge amount of demand from before. And this is a very, very key area to hold. If they lose this area, you're looking at about $80 if they lose this area right here. So, um, like I said, you want to be very careful with these chip names right now. Like I said, a huge part of the revenues were targeted to China as well. Nvidia, when crypto crash, not a lot of miners going on right now. So their sales from the graphics cards for all those mining operations actually down now. So and I don't know if you noticed, but few months ago, you can't even buy a graphics card. Right now, graphic cards are on sale. So, that's that's a very big change in a very short amount of time. So that's how quickly things can change for these companies. And chip names, they're cyclical stocks, meaning they boom when the economy is booming, and they drop like flies in recession. So that's the market direction we're leaning towards at the moment. So this is why I'm really just avoiding the chip sector at the moment. And then unless it gets super cheap, which is way down here, then I'll be considering buying some like down these areas down here. Tesla have a huge sell-off on Friday. Um, yeah, they tried to break above 21-day moving average on Friday, got rejected, came all the way down to the bottom. He even tested pretty close to $200, right? And like I said, once he loses $200, he's going to drop pretty quickly. So pay very close attention to the area. I'm gonna say 198. So on this low, this candle, because around 200, there's going to be a lot of fake out. So if he's actually going to hold, he's going to drop a little bit lower before he go higher, right? So pay close attention to this area. As you can see, already do a bunch of wiggly lines here. Um, this is the key zone to hold. If we break that zone, you're looking at this area right here, which is 140, and then finally 60, and you don't want to see it down here, but most likely if it is going to drop, it's going to drop to 140 and find some support at 140. So a giant head and shoulder pattern. Usually these head and shoulder patterns, they're either major support areas for a big huge bounce, or it's major turnaround reversal for the company, right? So if this drops, it can drop pretty steep after this big head and shoulders right here. So yeah, just pay very close attention. Like I said, right now it's not really a swing trading. It's not really an environment you want to pull things unless you're holding for a longer term for good reasons. And even if you're holding longer term, you want to stay hedged because if you're not hedging this environment, it's going to take you a long time before you make your money back. If we're going to go much lower, right? So if the market actually drops and then stock like Tesla goes to 140 and you bought it up here at 400, man, you're screwed. Yeah, you require 300% to get your money back, right? 300% is a good year. It's a great year. 300% is great for 5 years return, right? But 300% to make back your money, then this is the reason why you don't hold during bear markets, even though all the investors, all those fund managers tell you hold for long term. From my experience trading the last 20 years, I never hold through long term in a bear market. It's always best to go cash once things are breaking down, and then hunt for cheap stocks. That's what I'm trying to do right now, hunt for cheap stocks, because that's how I'm going to play the long term. I'm going to make the money on the way up, and then on the way down, I'm fully cash, and then I trade here and there intraday. And then once things get super cheap, that's when you start deploying your money, right? And that's where you're going to get your big bang for the buck. Because once this thing bottoms, you're going to make a few folds from your money, right? So that's what I'm waiting for right now, and that's what you should be doing. But anyway, everybody's investing differently, and everybody has different opinions. So this is just my opinion. It's not financial advice. I'm not a financial advisor. Anyways, let's take a look at my algo. My algo has been killing it, right? On Friday, we had the aggro was super accurate on a 2-minute time frame. So you can see on Friday, we started off with buy signal on the 5-minute. It ran up to 37.85, about 3800 area, and then you get the sell signal once that top get broken down, and you could have caught it all the way down to 3708. It was choppy in the afternoon, so you can see it got into a big squeeze, and then we got a big buy at the end of the day. So I actually told my subscriber this, all my subscribers, even in some free Facebook groups, that we expect a reversal on Friday because there was a lot of put buying and market makers going to take your money as it goes towards expiration, right? So as the day comes close, so around this area right here, about 2:30 my time, or 2:30 Eastern Standard Time, market makers actually start unhedging, which means they need to buy their stock and start covering their shorts and pushing the market back up. And as that happens, all those people that bought puts down in these areas all going to expire worthless. And then they got it up to a 3770. Max paying was around 3800. So basically, they just collected all the premium, all the people that bought puts in these strikes down here, all expired worthless, and the market makers made all the money, right? So that's how it works. And if you know how to do stuff like that, then you could catch some pretty big reversals. Although my algo picked it up, right? So right here, you can see my algo picked it up as it broke off this bottom of 3700. Even on the 2-minute time frame was a perfect timing. As you can see right here, there was a wedge, tested this bottom 3 times, wedge, and then finally we broken out of this consolidation, broken out of this high, continue higher into the close, and close slightly above the open, right? And if you caught these 3 moves right here, this up move at the open, this down move, and then this up move into close, you made yourself a ton of money on that day, which I did, and a lot of my subscribers did. So if you follow the algorithm, and you follow the key levels to buy and sell, and you understand a little bit about technical analysis, it can substantially increase your returns. Even if you don't know your technical analysis and you just follow the signals, right? You would have made a lot of money. This would be the only area where you could lose some money. And as I told people that choke my algo, you don't really want to buy in the afternoons when it goes sideways. You always wait for a breakout of range, which is over here. So even you didn't buy right here and you bought the breakout of the range, you could have still caught a substantial gain right there, right? That's a 50-point move from this area right here. 40-point move, sorry, from this point right here, right? So, if you didn't even trade the afternoon, you would have caught this, right? Which is huge move up and a huge move down, right? And I told people like the first 2 hours is best way to use the algorithm. After the first 2 hours, it can go sideways and the price action gets super slow, and you might want to avoid using it. But for those that understand technical analysis, you can still trade the afternoons, knowing what the price action is going to be like. So like a setup like this, where it was a wedge, a 3 touch on the support at 3700. So if it went the other direction, it actually broke down, the algorithm would have caught the short on the way down, would it get a big, huge short move. But instead it bounced back up, so it caught the big up move, right? So this was right here was a 50-50 in direction, but because of the option expiration, I knew that we were going to get like a squeeze back up based on how market maker is going to unhedge, right? So if you know something like that, then you get a little bit of an edge. But even if you don't, you still would have made some substantial amount of money with this algorithm, right? And those for people who don't know how to use this, it's actually quite simple. It gives you buy and sell signal based on confirmation of trend changes, and leading into the trend change is some early reversal warnings, which is the yellow candles right here. Also the yellow dots, right? The yellow dots are high probability of reversal areas. So as you can see, we got one here, one here, one here. And if the yellow dots are close to the sell signal, then that's a really good place to actually go into the trade. So as you can see right here, we got one, you could have caught it down. Right here, it was going to reverse and caught it up. Right here, we got a little bit early reversal. It was just a little blimp. But you would have, if you stay in, you would have made some money, right? So these are just early indications, and if you know like technical analysis, like if you knew this was a major support, you're looking for a breakout or breakdown, right? And then if you knew that this was a heavy resistance, you're looking for the early indication at a heavy resistance area to go for a reversal back down, which I did, right? So if you know a little bit about technical analysis, then these are huge early indications that you can take trades on. And even if you don't, right, it just gives you a warning telling you that if you're long, you might want to take some profits. And then if it reverses, then you can actually go the other direction, right? Anyways, if you guys have any question with the algo, or if you want to try it out, right now I'm offering 1 free month of algo trading with a monthly subscription to my Discord. So you get 1 free month, and then after the free month, you need to subscribe to the annual Discord to get this algorithm for the year, right? And if you do, and we also have training videos on how to use this. And especially if you're just if you're a seasoned trader and you want to use the algo for confirmation, it's a great tool for confirmation. I actually use it myself for confirmation, and it also keeps me in a trade longer because majority of the time I'm scalping. But if I see the algo still in a sell signal, I sometimes hold them for a little bit longer, and then I actually end up making substantially more money than from holding it longer than scalping itself. So it have increased my profitability and my win rates substantially since I have this thing made. So, even for a trader like me, where I'm very experienced in day trading, but it still is very useful tool to have to keep you in there for a bit longer, right? Because a lot of times, you overthink a trade, and that's a major aspect of trading that a lot of people have issues with. Is the psychological part of it, and this keeps your emotions down, right? Because you're basically seeing the setup yourself. You're going in for the trade, but you're scared of going into the trade, or you're scared to hold on to the trade. But if you use the algorithm to confirm your thesis and it's going in your direction, then you might hold on to it longer, right? So that's what I've been doing, and it's been working great. And anyway, that's it for this video. I'll see you guys next week.